let's talk institutional DeFi. Big old market maker, Jane Street, Wall Street trading firm, is doing some DeFi stuff. They took out a $25 million loan through a particular DeFi protocol. They have plans to take out maybe 25 million more. And this is all being denominated in USDC. Interesting signal, I think, for the institutional DeFi world. We've heard a lot of noise about traditional Wall Street firms seeking yield in these tight economic times. And now they're looking to DeFi as a place where they may be able to be involved, at least with Jane Street. So this is notable to me for a number of reasons. One, Jane Street ramping up its crypto activity. Jane Street, famously the home of Sam Bankman-Fried, FTX founder and CEO, before he became FTX founder and CEO. Now, Jane Street playing a little bit of catch up and doing some capital market stuff in USDC in the wilds of DeFi. Really interesting to see the institutional DeFi narrative kind of pick up speed this year. And I think this is an early signal of continued adoption and embrace by some of Wall Street's biggest names. Will, I'm going to throw this your way. When you see 25 million in USDC taken out through a DeFi platform from a big name, like what's your initial thought there?
Yeah, this is only the tip of the spear. I think a lot of these DeFi platforms are really going to grow across the board. So let's take a look at Aave, which obviously has nothing to do with this story here, but it is an important protocol within space. They've created a few different products that cater just to institutions with the goal of bringing in all this money into DeFi, right? DeFi is trying to rebuild financial markets from the ground up. You can't do that without some liquidity. You can't get best prices without liquidity. So you have to bring in this outside money and construct tools that they're able to use. That comes down to a lot of it, KYC. Are you able to KYC people in these platforms? So we've seen teams like Aave building out these things, and now we're seeing others getting into it as well. Like Jump Street, this is a big name to get into it. Like seeing any of these people jump into it. $25 million might not seem like much, but they're committed to doing more later. And I expect to see this continue happening. What could hamper this, though, is lower DeFi yields. If we go into a bear market and if the tokenomics for a lot of these projects starts drying up, like we saw in DeFi Summer 2 years ago, then I think we could see some people getting a little scared, staying in this area. Like you said, Zach, people want yield on things right now. Bond market isn't a great place to be. Equities, not a great place to be. Look at Netflix, took a nosedive last month. A lot of these places are just not great places to park money right now. What is a good place to park money? It's crypto. The thing with crypto, however, is it's still volatile. Yields can disappear in a second. You might have great yields for right now, but that 20%, 30% yield could drive very quickly, and you're left holding a bag of terrible tokens that are never going to see sunshine again. So I think that is the one thing that people should be aware of, and I'm there. Zach, I'll throw it back to you though.
I think another risk, you mentioned, the yields drying up, but another risk certainly is, another DeFi exploit, right? This is a big name partner. This is a big name on the back of Clearpool, and hopefully the security audits have been thorough, because I could imagine people trying to extract money through exploits in ways that we have seen in the past with various DeFi protocols. So I think there is that kind of reputational risk. And I think, hey, we're putting 25 million in now. We're going to try this out, make sure our money doesn't get rugged, and then we're going to see what happens after that. I think, be the yield shrinking or the exploit, the threat of exploits, those are two factors, I think, that are still going to be really important for how heartily institutions embrace these DeFi markets. But, again, to see, capital markets on DeFi from big names in the market making and trading space, really notable. And I think we're going to see more of these names pop out. Similarly to how we saw big names embracing Bitcoin as an asset, now we're going to see potentially big names on Wall Street embracing DeFi, their chosen protocols, the ones that they've done the due diligence on, the ones they've kicked the tires on. We're going to see them trying to get yield out of these systems in a way that hadn't previously been accessible to them. Lots going on here, but I'm going to kick it to Jen for her thoughts.
Yeah, I had a bunch of questions that the both of you already answered. And so when I was reading this, I was like, oh, that's really notable. And to Zach's point, this is the first time that a Wall Street institution has borrowed through a DeFi protocol. And I think this is exactly what you said. This is just signaling to other Wall Street institutions that are probably going to jump in over the rest of the year. I think it will be really interesting to see how regulators respond to this, because these institutions are going to be operating within the DeFi ecosystem. Just like you said, Zach, they will be susceptible to hacks and rug pulls. And when that happens, I just wonder how Wall Street is going to interact with the regulators to kind of rush into regulating the space, since more of these traditional financial players are now going to DeFi. So I think that will be interesting to watch. And I think that that's a great segue to our next and last segment.
It is a good segue. I do want to note one more thing. It's Clearpool's really interesting protocol that was used for this, uncollateralized loans. Not something you often see in DeFi. Normally they are like well topped over 150% plus collateralization. So interesting of note for that protocol, and something I'll definitely have to take a look into.